Hey everybody, it's Ty Leon Guerrero, TYLG, and I am here for our Friday financial wrap up with none other than my favorite guest, Mr. Michael Zuber. How are you, Michael?
Hey, Ty, I'm doing great, man. I love these financial wrap ups. It really allows me to look back over the last week and go, what happened? What moved the market? What do I need to pay attention to going forward? So thank you for doing this with me every week.
I love it. I love it. I want to just say that you are a man of massive action. Last week we talked about, I just kind of flippantly said, hey, we talked about the goal of 500 student deals. And I said, oh, you should get a banner. And as I'm looking over your left shoulder there, which is super rad, you've got the banner. Tell the viewers about 500. What is that about?
Yeah. So again, you get 100% credit for this. In our conversation last week, we talked about one rental at a time, students doing deals. And we talked about in the last 18 months, students did 162 deals. I like big goals. So what did I do? We tripled the goal, right? We tripled actuals and we shortened it by a third. So in 12 months, right, on the sign, it says from June 1st, 2021 till May 31st, 2022, students and followers of one rental at a time are going to do 500 deals. And I even went one step further. I have postcards made. So if you close a deal and you want to get an autograph for me on one of these, I'm thinking about getting a purple or maybe a silver pen, autographing in here, mailing it to you. You will need to DM me, email me, somehow get me your address, and I will mail these. And because I believe in you, I didn't get 500 of these. I got 1,500 of these because we're gonna blow this damn number out. And I got a big old stack of them here ready to send out. So we need to know. Let me know. Let me know when you close some deals. I got a big box over here. Let's go.
I love that. I love it too, because I could see, it's funny because I could see somebody in their office, their home office or whatever, having, just the postcards pinned up,
I will mail one for every deal. That's what you want. You'll get one for every deal.
I love it. I love it. Well, it's funny because before we were rolling, I was just showing with Michael that we've got two that close this week and then a third that's closing next week. But what I'm going to do is I'm going to DM you the actual partners on the deal so you can send it to them as a nice little surprise.
Yeah,
they don't even know it's coming.
I will sign them. I just need their addresses and I will send it to whoever you want. I
love it.
I have 500 on my desk and I got another 1,000 behind me. So let's go.
Let's go. I love it. So let's get into the financial news. It's June the 11th. I can't believe we're leaning toward mid-year now. Yeah. CPI numbers. Let's talk about CPI.
Yep. Biggest number of the week. We always have one. This one came out yesterday on Thursday. CPI stands for Consumer Price Index. And to say it came in hot is an understatement. It hit a 5. Now, last month was hot at 4.2. People were expecting 4.7, but it came in at 5. This is the highest in 20 some odd years. When you peel out and do core, it's the highest in 30 some odd years. So it's here, right? Now we have a trend, right? 4.2 to 5. Like last month, we talked about used cars, right? Used cars were disproportionately weighing it and pushing it higher. This month we have airline tickets, right? It's more people are traveling now than last year, right? As everybody should know and realize. But there is one sneaky variable that the Fed doesn't want us to think about, and that's housing. Cost of housing, rental and purchase was actually a decent part of this 5%. But when you peel back the number, they only said housing went up 2.2%. Everything I have seen from rent to price, it's double digits. So sometimes in these government statistics, there's a lag. So if you assume there's a lag, what does that mean? Does that extra 8% show up next month or the month after? Or is the Fed so out of touch that they just don't understand what's going on in housing? And we're going to find out next month. But unlike last month, which was used cars, completely supply chain, chip related, will clearly work itself out. Housing, pretty sticky, I think. Everybody needs a place to live. Airline tickets, transitory, because instead of flying, you could drive. There are options. but we all need a place to live. So it's going to be hot for a while, I think.
I would tend to agree with you. And it's interesting too that so a friend of mine that I work out with, he was telling me about like hotel rooms, like him and his significant other, they travel every couple of weeks, they'll go somewhere kind of local, regional. And he's like, oh my goodness, all the hotel rooms have all spiked up, even in not high destination places. He said all the room rates of like 30-40%, depending on what marketplace. So
yeah, we are not doing another summer at home. We want out. We have had enough of this 14 month of staying home. The consumer is hungry to get out, and they are spending money.
Absolutely. So let's talk about it. Something that I think is something that I've seen in headlines in the news, and something that even for myself, I'm not super familiar with. So I'm glad we're going to talk about it. But the Fed, they have a term called tapering.
Mm-hmm.
Go into detail. When they talk about Fed tapering, what does that mean? And what is that all about?
Yeah. So let's kind of break down, right? What most people think about the Fed, they think about interest rates, right? And the Fed will lower or raise interest rate, the Fed funds rate. What we've been going on really since the 2008 crash. So this isn't a pandemic. This is like since 2008. There's been something called quantitative easing. And basically what that means is the Fed has entered the market and is a buyer, right? They're pumping hundreds of millions and billions of dollars into the system, which is really leading to the problem of too much cash, not enough stuff, i.e. inflation, like housing we talked about earlier. But when people think about when the Fed is going to leave the market, because the Fed in theory shouldn't be in the market in the heavy way they are. Well, not in theory, they shouldn't be, but they've had to be, otherwise the system breaks. So the first move from the Fed is not going to be to raise interest rates. That will actually be one of the last things they do.
Okay.
So before that, they're going to taper their bond buying. So let's just say they're buying $100 billion a week. If they take their foot off the gas and they buy 50 billion, that is called tapering, right? It's reducing their foot on the gas. It's still keeping it on. It's just taking it off. But that's not even going to be the first thing they do. The first thing they're going to do is talk about taking their foot off the gas. Because the one thing the Fed wants to do, without question, is they want to clearly tell Wall Street a change is coming. They want to give Wall Street a chance to be ready for it. They don't want the market to just come out of nowhere and go, I didn't expect you to do that. So what I see happening now for the first time is people are starting to forecast, believe it or not, when the Fed will talk about tapering. So right now, as of June, the guess is they talk about tightening, just talk about it in August or September. They actually tighten, meaning they take their foot off the gas in the bond market in January or February, and then they raise rates sometime much, much later. So the first thing to realize when the Fed is exiting a market is when they talk about tapering, because it will be market moving. You will probably see the stock market not happy when that officially happens, because they're the right. Don't fight the Fed is raised asset prices and nothing higher than the stock market. So the stock market may not like that.
Got it. So, and I just want to almost in my own understanding, and then also for our viewers, is that, so what it really sounds like is that this is a warning to Wall Street, and it's specifically when they start to pull back out of the bond market, usually the stock market usually will pull back. You'll have some pullback there, and then also too, you should anticipate and expect that interest rates will begin to go up as well. But the tapering is the actual warning shots, if you will. Is that accurate?
Yeah, I would say kind of. Again, it's very subtle with the Fed. Just talking about tapering is the warning shot. Tapering is the execution. And then ultimately will be interest rate rise. It's kind of those three things. Talk about it, do it, raise rates.
Got it. And in terms of a timeline, Michael, just, is this something where they talk about it, they actually execute on tapering, and then we start to see, when do we see, is that usually a 90 to, when do you see the rates? And I know it varies, and I know that's a little bit of a.
Yeah. So I think what's going to happen probably is they'll talk about it and then they'll actually taper 3 months or thereabout after. As far as interest rates rising, like the Fed funds rate, we could still be a year out from that. Or, I mean, it could be as short as, it'll be between 3 and 15 months. It's really going to depend on how well the economy is going, right? If we were to dip into another recession, which again, we have a business cycle, but given where the world is and it's all coming out of this crisis at different levels, it's probably not likely. But I mean, who knows? These are such unusual times. But yeah, I think they tell us they're going to taper this year. They actually taper early next year. And then they may not raise rates next year. We'll see how hot the economy is.
Got it. Love it. Love it. Thank you for breaking that down. Let's talk about inventory. What are you seeing with inventory?
So inventory, as I'm out there talking about 2 million available homes by July 31st. That was crazy talk when we only had 1 million inventory, but we're already up to a 1.15. These are, of course, national numbers. So we're up about 14-ish% when you do the math. And I keep seeing more stuff every week. I have students around the country that are telling me, oh my God, he's right. So yeah, I still feel good about that call. And again, the talking heads on TV will say 100% increase in available listings. They'll try to scare you, but realize 2 million is still 2/3 of what a normal market is, between 3 and 3.5. It's just so much more than was available last year. But yeah, inventory is going up, in most markets. And, ultimately, we won't be paying retail for junk shortly. So I'll be able to do some deals. So I'm excited.
Yeah, I'm excited as well. Lots of opportunity there. I just also, for the viewers, I want to emphasize, and I want to just get your weigh in on this, is that when there is shift and changes, and when you see unusual marketplaces, as we're in this post-pandemic, when you see a little bit of uncertainty, really, that's an opportunity for us as investors, as real estate professionals. Would you agree?
Oh, no question. The thing I teach, I talk about looking at your market every day, 20 minutes a day, you get used to it. It really does speak to you. And what will happen, the rest of the year is the best of the best properties are going to sell fast. They just will. But that's not what you and I buy rentals for. We don't, if you look at the monopoly board, we're not buying Park Place or Boardwalk, right? We're buying somewhere else on the board. And what we're going to see is quality differences will start to sit, because as of right now, and I see it in my market every day, junk is listed at full retail value. And 6 months ago, they sold. They're not selling today, which means either the owners will take them off, or they'll have price drops coming. Prices are sticky on the way down, but they're going to come. So I'm excited. I am very excited.
I am as well. So let's move on to our next piece, which is the wage inflation and America's favorite walk-up burrito bowl, Chipotle. Tell the viewers the story about Chipotle and wage inflation.
I love it. So there's been so much talk about inflation. The Fed is out there talking about inflation being transitory. We talked about used cars and airlines, and a lot of this is supply chain related. But I've been telling you, Ty, we've been talking for 6 weeks now. The real kind of fly in the ointment is wage inflation. Wage inflation is real. Wage inflation is frankly awesome. It closes the gap between the bottom and the top. It's a good thing nationally speaking. Unfortunately, when you have wage inflation, prices go up. Chipotle is the cleanest example because it happened this week. So Chipotle, like a month ago, made public headlines declaring that everybody at Chipotle is going to make $15 an hour or more, right? Good for them.
Yeah.
Now they've done the math. And lo and behold, 6 weeks later, they've had to raise the price of all their items 4%.
Okay.
Right. Yeah. And oh, by the way, Chipotle is on the side evaluating the supply chain, cost of cheese, cost of chicken, cost of the burrito shells, and may raise prices again. But they knew wage inflation is sticky. That's the thing that's different. yes, if we work out the supply chain and shipping costs, cheese might be cheaper in 2 months and Chipotle will eat the loss for 2 months. But wage inflation, once done, sticks. So they had to raise the price of your burrito bowl 4%.
Got it. Got it. Thanks for breaking that down. Let's wrap up on lumber. I know, like, we've been talking about lumber. You posted a great example. I basically reposted where it showed a pallet of lumber, what it was,
That was crazy, right?
And then what it was, like a couple of sheets of plywood and
Exactly.
2x4s for the same money, right?
Yeah, I saw that.
Lumber.
Yeah, so lumber is an interesting thing because it really goes. It's a commodity in the asset you and I choose to play in real estate. And yeah, that picture is pretty ominous. I mean, to equate it to somebody not looking at it, think about a pancake stack of 8 deep. Right? There's a visual representation of 8 pancakes for $1,000. And then now that after inflation, you get 1.5 pancakes, right? It's eye popping, the difference. So that's the reality that builders, it's why I posted videos about builders going bankrupt. It's why builders have stopped building. They laid pads and stopped because lumber was crazy. The good news is lumber seems to have broken. Lumber, I think the last time I looked, is down about 30% from the peak. It's still way higher than it was a year ago, but it seems to have broken and seems to be rolling over. So, hopefully in the next 6 weeks or so, we're back to at least, closer to where we were, and we can really start going. Because I know there are plenty of builds not happening today because lumber got stupid. And frankly, we need more housing. So the fact that buildings stopped because of the commodity got too expensive, that's a problem. And I think it did break, so we can get more people back to work.
I love it. Well, let's get everybody back to work. As always, thank you so much, Michael, for generously sharing. For those of you, a few of you that don't know, you need to go and buy the book, One Rental at a Time. Absolutely great. Really simple. You actually posted this week the Amazon. Tell that little bit about the bestseller. I love, though, it not only was a bestseller on Amazon, but I believe you actually outranked somebody we know. Yeah. Tell that.
Yeah, I had to take a post. It doesn't happen a lot. If you guys don't know, when you sell on Amazon, they're constantly updating their bestseller list. And there was a moment in time where One Rental at a Time beat Rich Dad Poor Dad. So I took a screenshot of that and saved it for my records and posted it on Instagram saying, look at that, we beat Robert Kiyosaki. Yeah, that was a good day. It didn't last long, but damn it, I got the picture forever.
Yeah, I do too. In my mind, it's forever too. Kiyosaki, and that was a book that inspired you started.
Yeah,
I
absolutely.
love it. I love it. So you can follow Michael at One Rental at a Time. He's on YouTube. He's got the best financial news. Thank you so much, Michael.
You got it, buddy. Take care.